cash value life insurance policy design, right? So this is probably the most important piece to look at with a high cash value policy, aside from the company selection, right? You've heard us always say, go with one of the big four. They've paid the highest returns at the end of the day. So when it comes down to the design, right, at the end of the day, our money can go towards one of two areas. It can either go towards insurance premium. We'll call that also the insurance expense. This results in a very low initial cash value, buys us a death benefit, and eventually builds cash. And then we have our PUA, stands for Paid Up Additions Rider. The English translation for this would be cash. We just dump money straight into cash. So a question we get frequently is, how do I put all of my money into cash because I don't care about the death benefit? We get that quite frequently, and I get it. So we cannot put all of our money into cash, mainly because of a tax rule, right, MEC, which we've got other segments on. But a big reason why also, or I should say the other reason, is due to the insurance company, right? So insurance companies have limits that regulate how much money we can pay towards the insurance premium and how much money we can pay into cash. Those limits are, wherever we set our underlying insurance premium, when it comes to our cash, the insurance company will allow you to pay up to 10 times that number per year into cash. 10x the premium. What that means is if I have a $10,000 underlying base premium insurance expense, the company will allow me to pay in up to $100,000 per year at my leisure. Might not hit it, but I've got the option to. So that is the insurance company's rule there. Let's look at an example here. What we've got here is just a 45-year-old male with one of the big four companies, Mass Mutual. In this example, we're going to take you through their software because when you look at the raw output, they probably look the least like stereo instructions. However, we use several companies, obviously. So we've got a 45-year-old male, middle of the road health rating. That doesn't make a huge difference. Let's just go to the design here. We're going to show $25,000 a year going into the policy. We'll show $25K a year for 20 years actually. It could go longer or shorter if we wanted to. So let's highlight a couple things here. Where is our money going? At the end of the day, when we pay money into a policy, again, it can go towards our insurance premium or it can go towards cash. Wherever we set the premium, here we've got it at $2,500. That's about 10% of $25,000. We maxed it out. And then we put everything else into our cash component. So we've got an outlay, $25,000. Here's our total cash right off the bat. Here's our break-even point between years 4 and 5. So if we do everything right, we get as much money into cash as we can, minimize the insurance premium. What's going to happen, we'll have maximum cash up front, an early break-even point, and in addition to that, you'll have as much money as we can attain long-term because you're getting money in the account, earning interest right away. Right, so if we look at the same thing here, the year 20 mark where you paid in 500 grand, how much do you have in cash here? 765,000. We've stuffed this thing with as much cash as we can. Doesn't matter what company we look at. If we practice this concept, getting money into cash, you're going to see a cash-rich account, which is the opposite of a traditional whole life policy, which we will wrap up with. Everything's exactly the same. We're going to pay $25K a year into the policy. And we're going to put all of it into the insurance expense, and it's going to look not that attractive at all. So 100% of our money is going into the premium up top here. Let's zoom over. Here's our cash. right? First couple years, we've got zero, nothing to show for it. Eventually accumulates. This is an example of an old school whole life insurance. So this is what not to do. The last example is exactly what we want to do. High cash value, all buttoned up. Hope this helps. More to come.